One aspect of tax that you should be aware of is PAYE investigations. Around 1 in 10 businesses experience an investigation at some point, so it pays to prepare. They're usually nothing to worry about. They're typically routine visits carried out by HM Revenue and Customs to ensure businesses are handling their PAYE affairs in the right way. Now, some accounting firms offer PAYE health checks to help ensure that you're not overlooking any aspects that might be uncovered by an investigation. However, if the investigation uncovers any failures to comply with the rules, the implications could be costly. Well, joining me now to discuss this in more detail is financial expert Jasmine Birtles. Hello.
Hi. Hello.
Welcome to you. Now tell me, Jasmine, first of all, what can businesses expect from a PAYE investigation?
Well, when the guys from the HMRC come along, they can actually have access to pretty much all of your financial documents, including sales and purchase ledgers, bank accounts, and even your petty cash. So it's a really good idea to be as compliant as you possibly can. I mean, incredible as it may seem, tax inspectors are actually human beings. So,
really?
Yeah, I know, it's amazing, but no, really, trust me on this one. So if they think that you're being obstructive, then they are going to be more keen to look at every tiny detail. So it's a good idea to be entirely open about what you've got, give them complete access to all your documentation, and that will make the process quicker and frankly easier.
Okay, so what sort of areas might be covered by this investigation?
Well, there's certainly PAYE, payroll, and they're going to look at who you've got on your payroll and who you have as self-employed. Now, of course, if you've got people as employees, you have to pay their tax and you have to pay their national insurance. However, if they're self-employed, then they are paying their tax and their national insurance. But you do need to make sure that you're very clear about why certain people are self-employed and that you, again, comply with those rules, because it can be a bit of a grey area.
I was going to say, it can be extremely difficult as to know who should be on payroll, who should be PAYE, when they're self-employed and when they're not.
Yes, absolutely, particularly if they've been working for you for a while or if they're working in your office. It really depends on what they're doing, how long they've been working for you, how regularly they're working for you, who else they work for. And it's a good idea to get really clear advice from your accountants on this, because if they find out that actually somebody's self-employed and they shouldn't be, then you could have a severe penalty there. And of course, this is something for people who run businesses as husband and wife businesses, or if you're in the construction industry scheme. There are some grey areas here, so you really do need to be very clear.
And I suppose it's something that you should look at continually, because of course circumstances change and people may work for you for a few days, which then becomes more and more days until they eventually should be on your payroll.
Yes, absolutely. Do keep updating yourself, because it's one thing to think, oh yes, so-and-so's coming in all the time, but you need to have it absolutely by the book, because otherwise it's going to be costly.
So what other areas are covered by the investigation?
Well, they're going to look at business expenses, and these could cover your travel expenses, maybe company car, medical costs, these type of things that you would put against tax. Some of them you can, some of them you can't. So they will definitely have a look at those.
Okay, and what about the areas that the investigation doesn't cover?
Well, there are quite a few benefits that are non-taxable, and not everybody realises this in employee packages. For example, any retirement benefits paid into an employee's pension scheme, free or subsidised meals, some childcare, parking, and even some removal or relocation costs. Those are all non-taxable.
Okay. Now, Heaven help this, but what happens if the revenue doesn't cover that's something that maybe isn't in order?
Well, it really depends on the level and the amount of a problem that there is. Now, if they suspect that you have been continuously hiding things and you've got really quite large amounts of money that you should have been paying in tax that you haven't, then they will come down on you hard. They will insist on repayment of that tax plus interest, possibly plus a penalty. And it really is quite a lot of money, because they can go back 6 years. However, if it's a very small amount and it's quite obvious that it was basic mistake, then sometimes they'll waive it, or there won't be a penalty, you'll just have to pay back what you owe. once they do decide how much you owe, they will write to you and tell you how much. Now, you can challenge this. So if you think it's unfair, you definitely can challenge it. But once you've decided, between you, what you actually do owe, then they'll write to you and tell you what you owe, and you have to pay it pretty much then
Just
and
out
there.
of interest, how successful are those challenges normally?
Well, I think actually quite a few are successful. You'd be surprised, because I think they work on the basis that a lot of people just can't be bothered. It's a bit like parking tickets. If you got a parking ticket, most people go, all right, I'll pay it. And it's the same with the tax. If you have, a really good argument, and if you go on and on and on, and if you persist, if you are serious in your challenge, then yes, you can often get some money taken off. But hey, you do have to have right on your side.
Perfect. Jasmine, thank you very much indeed for some really excellent advice. Thank you.
Thanks.